Welcome to The Explainer. Today, we're diving into a question that, a lot of military veterans grapple with. Is your ECHS coverage, that's the ex-serviceman contributory health scheme, is it enough on its own, or should you maybe think about adding private health insurance into the mix?
So, if you're an ECHS member, I'm willing to bet this exact question has popped into your head at some point. It's a really common dilemma, and trust me, you are not the only one weighing these options.
And to really help us get to the heart of this, we're going to follow the personal journey of LT Colonel Niroop Chandran. He just went through this whole process and had to make this exact choice for himself. Okay, so here's the game plan for today. We're going to start by laying out the dilemma itself. Then we'll break down what each MHS actually offers. The pros and the cons. After that, we'll see where private insurance could fit in, look at some really smart strategies, and we'll finish up with a little guide to help you make the right call for you. So first up, the healthcare dilemma. At its core, this whole thing is really a balancing act, isn't it? On one hand, you've got this solid, lifelong government plan. But on the other, you might be craving that extra freedom and flexibility that private insurance can give you. Let's dig in. Moving on to our second point, understanding your ECHS coverage. Look, before we can even talk about adding anything on top, we have to understand the foundation we're building on. And let's be super clear, ECHS is a fantastic base for your healthcare. I mean, the benefits here are just huge. We're talking about comprehensive healthcare for you and your family for your entire life at a really minimal cost. Plus, you hardly ever have to worry about claim rejections, and you get access to both military and a whole network of private hospitals. It's an incredible benefit you've earned. Okay, so that brings us to Section 3, the reality of ECSs. Now, you might be thinking, if it's so great, why are we even talking about this? Well, that's a fair question. Let's look at some of the real-world, day-to-day challenges that some members can face. And here's the other side of that coin. In the real world, you might run into long waiting times for appointments, or maybe the choice of hospitals in your specific city is a bit limited. And the referral system, well, sometimes it can slow things down, especially when you need care urgently. These are the kinds of practical gaps that can make you a little anxious. Which leads us right into Section 4, adding that private insurance layer. Now, it's really important to think of this not as a replacement for ECHS, but more like a safety net, an extra layer of protection that's designed to fill in those exact gaps we just talked about. So why even think about a private plan? Well, it pretty much boils down to a few really key things. It's about the peace of mind, right? Just knowing you have a backup. It's about having the freedom to choose almost any doctor or hospital you want. And crucially, it's about having that flexibility in an emergency to just go to the nearest good hospital, no questions asked. Now here's a massive pro tip, something LT Current Chandran himself used. It's called porting. If you've got a corporate health plan from your job, you can often transfer it to a personal one when you retire. And the advantage is huge. All those waiting periods for pre-existing conditions, they're gone. You get full coverage right from day one. It is an absolute game changer. Okay, on to Section 5, smart strategies. So what's the smartest way to play this? Well, the best approach for you really depends on one big thing. Are you still serving, or have you already retired? Listen, if you're still in service, the number one piece of advice is this: start early. If you buy a policy about 2 or 3 years before you retire, you can get all those waiting periods out of the way while you're still covered by the military. Plus, you lock in a lower premium because you're younger, and you're applying when you're healthy, which makes rejection way less likely. All right, let's talk about the cost for a second. A good, comprehensive plan for a couple in their late 50s could run you somewhere between, say, 40,000 and 70,000 rupees a year. Now, that's not pocket change, so it's something you really have to plan for and build into your retirement budget. Think of it as a planned expense for your financial security. But what if you're already retired? Don't panic, it is not too late. A fantastic option to look into is what's called a super top-up plan. Basically, it's like high-level insurance that kicks in for major, expensive medical events. And it's a super cost-effective way to get that extra layer of protection. And this chart just says it all, doesn't it? You can really see the value here. A super top-up plan gives you that big safety net for a major health crisis, but the premium is just a fraction of what you'd pay for a full, comprehensive policy. It's a really smart trade-off. Here's another powerful tool for your kit, a critical illness plan. Now, this works a bit differently. If you get diagnosed with a major illness that's covered by the plan, you get a big, tax-free check, a lump sum of cash. And you can use that money for absolutely anything. Medical bills, recovery, even to replace lost income. Total flexibility. So how does this all work together in the real world? Well, for many, the perfect setup is this hybrid approach. For all your routine stuff, ECHS has got you covered. For a major hospitalization, ECHS handles the initial part, and your super top-up plan swoops in to cover the rest. And if, God forbid, there's a critical illness, ECHS takes care of the treatment, while your other plan gives you that big financial payout. It's about using the right tool for the right job. And that brings us to our final and maybe most important section, making the right choice. Because look, at the end of the day, there is no one-size-fits-all answer here. This is a decision that is deeply, deeply personal. First things first, you've got to take a really honest look in the mirror. What's your health like right now? And what does your family's medical history look like? Being straight with yourself here is absolutely the first step. Next, you need to think about logistics. Where do you live? How good is the ECS network in your town? Are the hospitals convenient? And are they up to the standard of quality you expect? And finally, we have to talk about the money. Can you comfortably afford that annual premium without it putting a major strain on your finances? Because, your peace of mind shouldn't come at the cost of your financial well-being. So let's just tie this all together. Think of your ECHS as your shield. It's your strong, solid base of protection. Private insurance is that extra layer of armor, that safety net that gives you flexibility and peace of mind. And the best strategy is always going to be the one that's tailored specifically to you, your health, and your finances. And really, that's the whole point. This decision isn't just about covering medical bills. It's about securing your family's financial future, and it's about being able to sleep at night. The right choice is the one that lets you face whatever comes next with confidence. So the final question I'll leave you with is this: what will give you that peace of mind?